This is weekly commentary 27, I believe. So let's begin by actually looking at the calendar. So on Monday, we see that there's a bank holiday for the GBP. So it's better to leave Monday to the side and, start your hunting on the Tuesday. On the Tuesday, we have the Euro red folder, right? And it's a German prelim. We're going to touch on the aspect of it being German in a second. And then we have uh, USD red news, Wednesday, red news, orange news. Thursday, we have the OPEC. And Friday, we have the big one, NFP, right? So be careful going into the end of the week because of the NFP. Remember, if Thursday is consolidating throughout the majority of the day, it's just stuck in a range, it's being set up for this news event on Friday. If you get a piece in the, Tuesday, Wednesday, be very respectable with the risks that you go on. And we're going to touch on more about being content at the end of this weekly commentary as well. But let's go back to Euro. German prelim, right? So it's the CPI, right? Measures of inflation. Now, Germany, right? When it comes to Germany with the euro is used amongst many countries, right, in the Eurozone. Germany is the biggest they are the biggest impactor of the euro, their economy. So whenever you see German news with the euro, be very considerate of that news event, right? That's it. So let's go on to the chart. Let's go to the weekly DXY. So for the weekly, right, what we expected was an expansion higher, right? And we wanted to see the high get run, but it didn't get run. However, next week I'm expecting the high to get run, just expecting to carry on that move higher. And if we go to the daily, it becomes more evident why. Now you see what happened was we created this on Monday, right? Or I think it was no Tuesday we created this equal high. Where you see this candle's wick, this candle's high to this candle's high, that is relatively equal. And then what happens is it goes back and forth and it's oscillating from the Tuesday, Wednesday, Thursday, right? Now, what is this? This is actually an accumulation. Accumulation, manipulation, with all that red folder news that was, the Friday that just passed. And where is it likely to go? Distribution, upwards. I'm anticipating these equal highs, right? There's a ton of buy side liquidity up here. Sell side liquidity has been taken. An area of imbalance has been rebalanced. Now, what is the algorithm going to target next, right? Taking sell side liquidity and rebalance an area, it's going to deliver the liquidity to the opposing party. Buy side liquidity is going to seek buy side liquidity, right? So I'm anticipating these equal highs to be the next stop for the DXY, right? Now, if we go down to a 4 hour, you can see it even more, right? You see like this, it's like a retail pattern, right? You have relatively equal lows here, right? Now, you see retail patterns when you see like a wedge forming. You see like if we take a trend line, you see how retail traders will have something like this, right? They'll have something like that. This is an accumulation pattern for retail, and this is a breakout trader's wet dream, right? When they see the channel and they want to take the breakout on each side. When they ran this, there was a ton of sellers entered in the market for the dollar going short, right? Now, who buys that up? Smart money. They use that as offset accumulation to get their long order filled. And what happens? Look at the displacement away from it, right? Now, if I just remove this, you have a breaker block here, and you have this down close candle is an order block, right? So be very mindful of trading back into this down close candle before moving higher, right? If we go to the euro, just take these off for a sec. If we go to the weekly, right? Now, what do we see on the weekly chart? So we had this large displacement down, right? We had that large displacement down, and this is a mitigation block, right? You have these two up close candles with the order block, You have the fair value gap, you have the mitigation block, right? You have the rejection block here. You see how it's all in line with the PDRA matrix, right? First you have the mitigation block, then you have fair value gap in here, you have order block, and then the rejection block is the last thing before this high. What happened? Price came into this mitigation block and it's starting to move down, right? Now, let's touch on something. There's a lower low here, right? You see how euro already went lower, and the same with pound. See how pound broke its low, went into its mitigation, and it's now gone down lower. And you see how it's breaking this low. But let's look at the DXY. The DXY didn't run its high. So how would you start framing trade ideas? Oh, they broke their low, but DXY hasn't run its high. You see this, right? For the euro to match up with this price action, what did euro do? It broke its low and it rebalanced the area, right? DXI would have had to break the external range high and come and rebalance this range, but that didn't happen. And what does that show? There's underlying weakness in the euro and the pound because these runs on their low should have been offset by the run on dollar breaking its external range high. So there's underlying weakness in these pairs, right? The moves down are way more explosive than the moves up. The market is just easily folding over rather than trading higher. This is something to consider because it tells you what you should be looking for in that market. You should be being patient and waiting for the sells instead of the long positions, right? Now, you see this rebalance of this candle. For euro, they already ran the range, right? This range low, they already ran it. And that for the DXY, that moved back up down into the weekly candle, that was used when you break external range, right? You see when you break this low, when you break it and you leave like an imbalance as you break it, right? The bearish one, when there's a bearish fair value gap, when you break the internal range, you know how we want to retrace back into it to fill it. Let me use my path tool so I'll show you guys. When you go from here and you break this low here, right? You see this move down when it leaves an imbalance, and it usually does more time than not leave an imbalance. You want to see the market come back up to retrace 50% equilibrium, right? Rebalance any inefficiency here and then move down lower. Those inefficiencies created, right, when you break external range low or high, that's called a SIBI, and the opposite will be a BISI. The SIBI is the imbalance that you want to rebalance after you break external range external range low. And the BISI is, you see how if we broke this external range, right? You see how if we just, this candle just traded this external range and this imbalance was left, this will be a BISI. The external range retracement back into it, the BISI, rebalance it, and then we'll start setting up long positions again, right? The Euro's retracement was already offered back. Now, the run on this DXY's high is going to be paired now with the run on this Euro's low and Pound's low. Now, there's going to be a time where Euro and Pound, they're going to have to get back in line with the DXY because as you can see now, it's relatively weak compared to the DXY because the DXY is meant to run its high and Euro's meant to run its low, but Euro's ready to run the low. So there may be some time in the market now, I don't know, it might be this week or next week, where you're just going to see staleness in the euro and the pound while the DXY moves. And it's going to be to, reset the correlation between them so that they can start moving in line, running the highs and lows together again. Because right now, it's the correlation, there's been a crack, has been broken. The DXY didn't run its high, but they both ran its low. So there's going to be a time where that's going to have to be corrected by the market and they'll start running it together again, right? So looking at the euro, where can we expect the next daily, the weekly candles to go? We can expect it to go lower, right? Now, there's still this fair value gap, right? I'll consider this candle and consider this up close order block, right? If you see there's like some sort of consolidation a sweep on the previous week's high into this order block, find rejection off here, can offset the next weekly candle to have a lot of, downside, right? But I'm still short on foreign currency. I'm still long on the dollar. That's my bias, right? Now, touching on the idea of Bitcoin, right? I've been looking at this actually, and the reason I've been looking at it is because of this. You see how you had this institutional order flow entry, Joe? You see how there was this fair value gap here, right? Now this monthly candle, what did it do? It swept the previous month's high, rebalanced the fair value gap. That's the institutional order flow entry, Joe. Running that, candles high, rebalancing that fair value gap. And now, where do you think the monthly candles are printing towards? Do you think they're printing lower or higher? Now, this tells me that maybe there's going to be a explosive move on the dollar because looking at the dollar, yeah, we're bullish on it. That's true. But for Bitcoin to drop heavily, it's either that something has gonna have to wreck the entire crypto market, or something is gonna offset the dollar to move exponentially higher in order to crash, the crypto market and Bitcoin. Because I'm expecting lower prices on here, then I should be expecting much higher pricing on the DXY because they move inversely together. Did you see how intermarket analysis can help you with your bias as well? Right? It's these small little finer attention to details which can really take your what you're expecting to the next level. Right? Now, the weekly for Bitcoin, I know there's a lot of you that look at crypto in the mentorship. Sell side liquidity draw here, and then the range low is the final draw on sell side liquidity for Bitcoin. And I see downside. If you go back to the monthly, there's this candle at least, right? I say at least 10,000. I see overall for Bitcoin. I've said 10,000 for some time now. I don't know if it was on a recording, but on the Telegram chat, we've been speaking about seeing four-figure Bitcoins again on USD, and the move into 10,000, right? So if we go into Euro, let's go onto 1 hour chart. And now the zooms, right? It kind of, as we do the zooms, especially because we have chapter 3 and chapter 4 zoom towards the end of the week, it's kind of going to be a repetition of what we speak about here. But essentially here, now this looks like a consolidation and it's very unfavorable to trade, but it's not. I'll tell you why. Going into the market and really listen here, you're already predetermining, right? You're already predetermined buying or selling. What are you looking for, right? Your weekly and your daily candles, what are they reaching for? Now it's not like go back to the let me go back to the daily. The weekly, if you're expecting the weekly candle to print lower, you should be looking for sells that week. Now on the daily, right? If you're expecting, just look at this. Take each candle, right? Look at what's currently happened, right? What did this candle do in price that can give you information for what the next candle's doing? And I say this every weekly commentary because I'm trying to brainwash you into getting into this idea. The current candle that's being printed, that's the current one here right now. What has it done to give you the information of what is the next candle's likely to print given this candle's open, low, high, close, right? This candle printed higher, rebalanced this gap, right? And now it's found heavy rejection and it's coming lower, and it took out this daily low as well. It ran imbalance, took out the previous day's high, and then it ran the low. Do you expect the next candle to trade above its high or beneath its low? Simple. That's it. Now, using that, right, you're expecting the candles to go lower. Until where? That's not the next question. Where are you expecting the candles to trade lower until when? Until your draw on liquidity is met. That is going to set up the methodology for you to look for short sells. Now, every single day, now this is the tricky part, sticking to your bias, and over time this will become very easy for you. You're only looking to become a seller. Now, if you've done chapter 4 and chapter 3, what are the signatures you're looking to sell in price? Run above the midnight open, try find a match with a PD array, and wait for a short setup to form, right? How many times was there a run above midnight open to offset sells? Run above midnight open, There's sells there. Run above midnight open. You can sell it there. Run above midnight open. There was sells in here, right? Now this was way later on in the day, but the guys that trade indices for US 500, this was very, very textbook, right? Now I want to touch on this to reinforce an idea. So Monday and Tuesday, right? So Monday, you see how it traded down lower. You see how it gapped and look at the displacement. It's clearly waiting for what? It's clearly looking to displace lower until some sort of sell side target is met. Now we have these lows and we have this imbalance. And if you follow me on Snapchat, which most of you do, you know that I was anticipating this fill and it was pretty smack on, right? Now I didn't expect it to be that smack on. I just wanted to see this area get traded into, but it just happened to do that and it looks pretty nice. Now you see, if we go on the weekly for the S&P, right? We wanted to see this look. You see how these two candles wicks, right? You see how I'm considerate and I don't just look at the highs. I look at the candles open, high, low, and close. Because on the weekly and the daily, these highs are significant, right? View them as highs, as normal highs, right? Now you have this weekly high and weekly high. That's relatively equal. What happens here? Turtle soup fills the 50% of this fair value gap, runs buy stops, and goes the other way. Now, where do you expect the next candle to go? Lower. How many times have we seen this in this mentorship? How many weekly comments have we seen swing high being made in a premium and we expect the next candle to trade lower? And we had this weekly fair value gap as well, right? And then we have this. Now, when you're in a premium and we know from the weekly we're expecting lower prices and you see this retracement higher, this should, you know, entertain you because now you're rebalancing this imbalance, right? Now, when you're in this premium, and really listen here and dial in right now, you see when you're trading up into this premium because you're expecting sells. Now, being delivered into a premium when you're looking to short is the market giving it to you on a plate. Now, when you're in this premium, what are you doing? You're hunting, the reversal to continue down. So we're gonna mark out that daily candles high, right? Now, what do we expect? We want to see, and this, right, this is for any pair, not just the S&P, right? What you want to see is, look, you want to see it run. If you're in a premium, this is the only trade setup you guys will need. Listen up and just flip it for when it's in a discount in a bullish market. When you're in a bearish market and you get delivered into a premium, the only trade setup you need to profit from this market, from any market, is this. You're in a premium. Now, when you're in a premium, this is what you wait for, and take a note of this. When you're in a premium and you're looking to short and you're already in the higher time frame premium area, you're waiting for every single day to run above midnight's open price, right? You're waiting for the run above midnight opens price, which is this price, which is this candle's open, right? Preferably a sweep on the previous day's high is very nice. And if you get the sweep above the the previous day's high, that's when you're waiting for your reversal. Chapter 4 covers this. Now let's go to a 5 minute. You ran buy stops, and then what happens? That displacement away happens. Now what do? If I just, remove this, your eye should go here straight away. Fair value gap, right? And you need to practice seeing these fair value gaps because they will get you in a lot of trades. You ran buy stops, right? You know that we already ran the daily high, so let me just delete this. We ran the daily high. We're in a premium. Remember, this is all in the context of a higher time frame premium. This is only why it's valid, right? When you're above midnight price in a premium higher time frame, that is truly oversold. The algorithm really recognizes that, right? And this is where your high probability trade stops are going to come. In those high time frame premium and discounts, you're waiting for the run above midnight and beneath it for a discount market. And then what happens? Displacement happens. High to low, trade back in. This fair value gap, snap the trigger. High, stop goes above here. Trade. You can aim for this low, the zero at least. Now, putting your stop here, if you lost that trade, it just means that, yeah, it wasn't my trade setup. It it had all the signatures for it. We're in a premium, ran the previous day's high. When you run the previous day's high and you're in a premium and you get that 5 minute displacement away intraday, right? You get that displacement away. Now, it doesn't have to be as significant as this, right? But this is a clear displacement. When it comes back into it, because that's a market structure shift as well, isn't it? You got your low, high, and then lower low, right? You're not expecting this high to get run again, because this is, the run on stops. When the run on stops happens and you displace away and create market structure shift, you don't anticipate that high to get run again. So your stop being there, if your stop loss gets hit, it's good. It's good it gets hit because it literally invalidates your entire trade. And that's how you got to see it. But you see that is an entire model, what I just said. Now, if it's for a bullish market and you're in a discount of the market, right, you're waiting for the run beneath the midnight price and then market structure shift to go higher. That's it. You just need to exercise the patience for letting the market trade back into a higher time frame, premium and discounts. At least some sort of 4 hour discount or premium. That's it. That's all you need to do. Learn how to be content as well. Some of you guys are going in with the wrong idea. I need to find a trade every single day, and when I don't get a trade, I'm getting frustrated. It's childish. It's not in a rude way, it's very childish because you're not going to have that idea of trying to go in and get a piece every single day. You're trying to go in and see where can I find my model forming? Where can I go and get a high probability trade setup? Taking one trade, if it's a 3-to-1, if you can make 3R a week, that is plenty. That is enough to pass any funded challenge. What's the max funded that you need? On the phase one is 10% FTMO. 3-to-1 once a week on the Wednesday or Thursday. You'll find it. Why? Because Wednesday and Thursday is going to start building towards the opposite end of the range, right? By Wednesday, the opposite end of the range is already made in. You know this from chapter three's data. Use it. Use that data. I did not get you guys to do that for no reason, right? Use that data, and if you just pick the Wednesday and the Thursday, you'll probably start having a higher win rate, right? Now, if you wait for that Wednesday and the Thursday, and you find one 3-to-1 trade setup a week, or you find two, how can you not pass any funded challenge? How? You'll cream them, right? The phase two, you'll cream the phase two, and then you have the live account, and then you can just do one trade a week, looking for that high probability setup. Make it easy for yourselves. Go in with a fresh mind. Don't clutter yourself. Let it come to you. Don't force your narrative on the chart, right? So I just wanted to cover that for the weekly commentary. Covered Bitcoin, covered where to expect. Yep, everything's ticked off. So until next time, and I'll see you guys carrying on chapter 5, right? So until next time, I'll see you guys later.